Many people think that to invest, you have to be a millionaire, have a great inheritance, or have won the lottery. Today, in this video, you will understand that it is not necessary to be a great multimillionaire entrepreneur to be able to invest your earnings correctly and multiply them. Many great stock market investors were not born rich. They became like you with a small investment well done. First and foremost, knowing how to manage your finances and the right warnings are the best investments for you. Are you thinking about investing in the stock market? Maybe you don't want to invest in the stock market because it sounds complicated, or you don't know how, but somehow you can start managing your finances so that you can save and achieve your goals. There are many ways to invest money. To start, you have to know what your expenses are and what your earnings are. From there, set a goal, like buying a car or a house, maybe a trip you've always dreamed of. Then, according to what you earn and what you spend, you will know how much to save. You can also identify those expenses that tend to haunt our day-to-day. Identifying them helps you to replace those small expenses that put a dent in your wallet. For example, going out to eat or ordering food at work. If you start cooking your food, you will see how your expenses are reduced and your income increases. Now, what to do with that money that you managed to recover? Well, remember that goal you set for yourself? With that goal in mind, think about how long you want to achieve it. At this point, you'll determine how much you'll need to save per month to reach your goal in a given amount of time. So, let's review. From what you earn, you subtract your monthly expenses, like rent, food, and transportation. From there, you see how much money you need to pay for your obligations and essential expenses. If it's high, try to reduce some unnecessary expenses. You should ask yourself, how much does that dream cost? And now, divide that amount by the amount of months you can have it based on how much you can save. If you earn 1,000 euros and spend 500, it means you can save 500 euros per month. Simple. If your dream is to go on a trip and you can travel with 10,000 euros, you know that you can achieve your goal in 20 months. If you want to make your trip in 10 months, you will have to save 1,000 euros a month, which means you need to earn extra money. Plus, your work will make at least 500 euros more a month come into your balance. How? One way is to invest your savings. Here are the tips to determine whether your investment will be a good one or not. What you own and earn on your own is called an asset, but it also has a liability. It doesn't make money. For example, if you own 2 houses and rent one, that house is an asset. If you own a car but it is not an Uber, you have a passive asset. How can we get assets? That's a question everyone will ask themselves when reviewing their finances. Perhaps you already know that you need to generate extra income and you have done all your homework, but you don't know if an investment will be profitable or if you will lose your savings. Investing in a company has its risks. Buying shares without knowing the company has more risks. Here are some keys to determine whether the company in which you are going to make your investment is safe. To begin with, you should analyze the company's accounting books very well. There are many indicators there that will tell you if and how long it will take to recover your investment, as well as receive profits. The first key to analyzing a company is its gross margin. It is obtained by subtracting the costs from the sales of the products or services provided by the company. From there, you divide that margin between the sales and you obtain the gross margin percentage of the company. This percentage must be high to obtain the ROI. Otherwise, if the costs of your product are higher than the sales, you're wasting your money. Another important percentage is the operating margin, which indicates the net profitability of a business before interest and taxes, EBIT. It is obtained by subtracting business costs from sales. This margin should also be high. A positive number indicates that the business makes good profits after paying its obligations. Otherwise, its profits are not perceptible to the investor, they only pay taxes. In addition to these margins, the so-called leverage is a percentage that indicates whether the company you're investing in is profitable as a business. The operating leverage is the percentage of fixed costs. It is obtained with the ratio of the gross margin minus the variable costs. From this division, the fixed costs are obtained. This percentage must give one or more. In this way, the company or business indicates that it has more profits than expenses. Another leverage to pay attention to is the financial leverage, which is the level of debt of the company. Total capital employed is the book value of all interest-bearing debt plus the equity of all owners. If we have $50,000 of debt and $50,000 of equity, we have a financial leverage of $100,000 divided by $50,000. The total risk of the company is called total leverage, obtained by multiplying the operating leverage by the financial leverage. The result must be less than 5. Other important metrics are the ratio of internal and external investors, in addition to the ratio of current assets to current liabilities. To ensure that the company has sufficient funds to pay its assets, it should expect that it will have sufficient assets to pay its liabilities. Perhaps the most important measure, and the key to knowing if it is a good investment, is to observe whether the company, when comparing numbers, makes more profit for its investors than for its investment alternatives. This way, you will know if the money you invest will help the company to grow and generate more profit, or if, with your alternative investments, you generate profit that you will not be able to claim. What do you think about today's topic? Would you invest in the stock market? Leave a comment to let us know what you think. Like the video if you're interested in this type of content. Shall we continue? If you still don't want to invest in the stock market, there are other options for you. The stock market is not the only way to make your money grow. Of course, it is also important to be safe and know what type of investor you are, as there are riskier investments than others. The riskier ones generate more profit, but of course, it depends on how much you are willing to risk, whoever you do it with. However, there are safer ways to invest, where the return is smaller but safer. An example of this would be in real estate. This type of investment is the most profitable, however, the initial investment is quite large. Mutual funds are baskets of securities, financial products composed of a variety of assets that can be more or less broad. The composition of the fund may also include equities or fixed income, financial products with a pre-agreed return, in absolute or variable percentages. In other words, there are funds that may be made up of 50% equities, company shares, and 50% fixed income, public or private debt, with an established and agreed return. This fund can be active, i.e., a professional or a group of managers at their discretion manage the assets of the portfolio as they consider profitable. Or it can be a passive fund, indexed to a stock exchange, such as the NASDAQ 100. While the NASDAQ 100, which is the index representing the 100 largest technology companies in the US, some experts say index funds are more successful and generate higher returns. Currency trading, also called Forex, involves buying and selling currency pairs in the hopes of making a profit. Generally, the Forex investor takes advantage of global geopolitical conflicts as well as economic events that influence world currencies. This is perhaps more common for smaller investors. If you want to invest big, you can also trade cryptocurrencies. There are many platforms where you can buy and sell. However, it is quite risky, as its level of volatility is known for its speculations on certain cryptocurrencies. Bitcoin, despite its recent falls, is a good choice. It's the most popular, and no one dares to question it. Some call it the gold of cryptocurrencies, and some experts say that it is considered cyclical, meaning it has very marked peaks and then rests for a few years. If you're considering it, you should know that it is a long-term investment. Commodities will always be a good investment. Items that are extracted from nature and can be turned into a commodity, such as gold, oil, tea, cotton, etc. If you have the opportunity to invest in commodities, do it. There is no better safe haven than gold. Personal finance has a lot to do with the investment you want to make. You have to be quick and smart. Sometimes the profit comes from less thought out ventures. Sometimes it's a matter of faith and trust in a company that looks promising and shares your values, and that's why you want to support it. Sometimes it will be pure business. There are trends as in fashion. There are currents to follow that are often easy to understand choices. Be careful where you put your savings. Now that you understand that no investment will be for you. Remember that if you are a beginner with a minimum wage, you can also invest. The profits will be according to your initial investment, but if you do it correctly, your profits will increase and you can invest more sums next time. Don't give up. Knowing what type of investor you are and how much you're willing to save from your salary of earnings can help you decide what type of investment is right for your lifestyle and the size of the business you're looking for. There are no small investments, only bad investors. And if you want to go all in and invest in the stock market, use the tips we recommend in this video to make sure you get your investment back and make a profit. And here we go with today's video. Thanks for joining us for another video. Like us if you like today's content and leave a comment. What type of investor are you? Subscribe for more content about entrepreneurship and business. See you next time.